New rules are being proposed which will see Kenya's pension schemes allowed to invest more in private equity funds. Currently, schemes are allowed to invest in private equity, but only through the other asset categories. Joining us for a discussion on the new rules for pension schemes is Edwin CNBC. He's the managing principal at Edwin, managing principal at Incubate. A very good afternoon to you, Edwin. I'm getting my words a bit twisted there. Thank you so much for joining us this afternoon. Just talk us through the current state of pension scheme investments in Kenya.
The pension schemes are controlling about 417 billion Kenya shillings, which is about $5 billion US. I think about 23% of the assets by December were in government securities, and then about another 20% in quoted equities. Then the rest was split in, property and other categories of investment. The sector has grown fairly well from almost a zero base in 1997 to the current $5 billion in 2012, which has more or less tracked the growth of the economy. The growth of the economy, and as the economy grows, more people have been hired and more pension funds have been accumulated.
So really this has been, well, the growth in pension schemes has been an effect of economic growth in Kenya. Talk us through the proposed new rules for the pension schemes to really start investing in private equity funds.
The proposal is being pushed by saying that the country needs more investment. The bulk of investment comes from banks for expansion capital. And there is a feeling that if Kenya is to realize her potential, then private equity needs to step in to undertake risky, illiquid investments. Now, the proposal has floated to the pension industry, and there's been a bit of wariness because even the figures of December 2012 show there was negligible investments in other assets, though the pension funds are allowed, because many custodians feel there are no well-structured products to put their money into. So maybe this is a question of, should the government put aside some money to stimulate the private equity industry, then let the custodians feel comfortable following later? Those could be some of the ways of going about it.
So there's a lot of challenges. Talk us through some of the other challenges that could perhaps lie within this move, and perhaps opportunities that lie ahead for the pension schemes.
The country is currently in a very aggressive infrastructure building spree. This is a critical infrastructure that is required and that has demand. For example, there is a huge power shortage. So the pension schemes could do well to invest in, say, the power sector that requires huge amounts of funding. The proposed Lamu port, also the country needs a port because the current Mombasa port, has reached its limits. There's a new railway line required. So I think the investment opportunities for pension managers in securities that have good returns and that are solid and safe still exist. But on the other side, they could also still diversify and put some money in private equity, because these could be the engines of growth in the future.
And looking at SMEs, has there been a move perhaps for some of the pension schemes to invest in those?
Pardon?
In the SMEs? Has there been a move for pension funds to invest in those?
No, there was a proposal to have pension funds invest in funds that focus on SMEs. The Financial Sector Deepening Program, which is funded by DFID, I think commissioned a report in 2009. And the fund managers, both the pension fund managers and insurance fund managers surveyed, also expressed a lot of wariness of taking the funds of pensioners and policyholders and putting them in a sector that was untried. Though they said if well-structured products could be brought to them, they would be open to looking at them, because all of them are seeing their assets grow year on year. I think last year the insurance premiums shot up, both on general and life. So yes, they are saying that they are collecting more and more money, and they are not opposed to looking at well-structured products.
And in terms of growth rates for the pension scheme industry, what do you make of growth rates going forward?
I think there are two ways of looking at growth rate. There is both the amount of contributions that are coming in and the total assets they control. The total contributions, I think the Kenyan economy is on a sustainable growth path, especially considering now that it's, the East Africa community is opening up and trade is increasing, which obviously will mean that the economy will be on a sustainable growth path, and more firms will make hiring decisions, which will mean that the amount of pensions that, the pension contributions will also go up. In terms of total assets, I think the capital markets and money markets here, you will see that the NSE index can move, up and down quite significantly, and also the value of bonds that a lot of these pension funds hold can move depending on the interest rates regime that the government sets aside. So what has been happening, the total assets they control has been fluctuating a bit because of policy decisions and the rest of the stock market. But in general, if you look at over the last 15 years, it has been a steady compounded growth rate. And with an economy like Kenya, with a very young working population that's just taking off, we should expect the growth story to continue for the next 20 or so years.